NVIDIA. Just the name sparks excitement in the tech world. This company is a giant, powering everything from gaming PCs to artificial intelligence. But is it a smart investment? That's the million-dollar question. NVIDIA's stock price has been on a tear lately. Investors are excited about the company's future in AI, but some experts worry that the stock is overvalued. They think the price is too high. So, should you buy NVIDIA stock? There's no easy answer. It depends on your risk tolerance and investment goals. Let's break it down. We'll look at the reasons to buy NVIDIA and the reasons to be cautious. Then you can decide if it's the right investment for you. NVIDIA has been a leader in the tech industry for years, known for its cutting-edge graphics cards and innovative technology. The company is at the forefront of AI research, contributing to advancements in machine learning and robotics. Their financial performance has been impressive, with strong revenue growth and profitability. Many investors see NVIDIA as a long-term play, betting on the continued growth of AI and gaming industries. However, it's important to consider the risks. The tech sector is highly competitive, and market conditions can change rapidly. NVIDIA's stock has experienced significant volatility in the past, which can be unsettling for some investors. Diversification is key. Don't put all your eggs in one basket. Consider how NVIDIA fits into your overall investment strategy. Do your research, understand the company's fundamentals, and stay informed about market trends. Talk to financial advisors and other investors to get different perspectives. Ultimately, the decision to invest in NVIDIA should be based on your own analysis and comfort level with risk. Whether you see NVIDIA as a tech superstar or an overhyped stock, make sure your investment choices align with your financial goals. NVIDIA is a leader in artificial intelligence. This technology is changing the world. It's used in self-driving cars, facial recognition, and more. NVIDIA makes the chips that power AI. That's a big deal. The demand for AI is exploding. Companies across all industries are using it. This means NVIDIA's chips are in high demand. This demand is driving up NVIDIA's sales and profits. Investors love growth, and NVIDIA is a growth story. The company is well positioned to benefit from the AI revolution. That's why many investors are bullish on NVIDIA. Look at NVIDIA's financial statements, and you'll see a story of success. The company is consistently profitable. Revenues and earnings are growing at an impressive rate. NVIDIA has a strong balance sheet. This means it has low debt and plenty of cash on hand. This financial strength gives NVIDIA the flexibility to invest in new technologies and weather economic storms. Investors love companies with strong financials. It gives them confidence that the company is well managed and has a bright future. NVIDIA's financial track record is a major reason why investors are attracted to the stock. NVIDIA is a dominant player in two huge markets, gaming and AI. In gaming, NVIDIA's graphics processing units are the industry standard. Gamers need NVIDIA's powerful GPUs to run the latest games. And in AI, NVIDIA's GPUs are used to train and run complex AI models. Companies like Google and Facebook rely on NVIDIA's chips for their AI initiatives. This market dominance gives NVIDIA a significant competitive advantage. It's difficult for competitors to challenge NVIDIA's position in these key markets. This dominance is a major factor driving NVIDIA's growth and profitability. The risks of investing in NVIDIA. A look at the flip side. While NVIDIA has many strengths, there are also risks to consider. No investment is without risk, and NVIDIA is no exception. Understanding these risks is crucial before investing. One risk is NVIDIA's high valuation. The stock is trading at a high price-to-earnings ratio. This means investors are paying a premium for NVIDIA's future growth potential. If NVIDIA fails to meet these high expectations, the stock price could fall. Investors may be disappointed if NVIDIA's growth slows down or if competition intensifies. Sky-high valuation. Is NVIDIA's price justified? NVIDIA's stock price has been on a tear, experiencing a meteoric rise that has caught the attention of investors and analysts alike. It soared to new heights, breaking records and setting new benchmarks in the tech industry. This incredible run-up has led some to question whether the stock is overvalued, sparking debates among financial experts. A high valuation means investors are paying a lot for each dollar of NVIDIA's earnings, which can be a risky proposition. While NVIDIA is a fantastic company, known for its innovation and leadership in the graphics processing unit market, some argue that its current price doesn't reflect its true value, suggesting that the stock might be inflated. They worry that investors are getting caught up in the hype, driven by excitement rather than fundamentals. They fear that the stock price could drop if NVIDIA doesn't meet its lofty expectations, which are incredibly high at the moment. This is a legitimate concern for potential investors to consider, as the market can be unpredictable and sentiment-driven. It's important to weigh the potential risks and rewards, and to consider whether the current price is sustainable in the long term. Ultimately, the decision to invest in NVIDIA should be based on thorough research and a clear understanding of the market dynamics at play. As with any investment, it's crucial to stay informed and to be prepared for potential volatility in the stock market. Diversification and a well-thought-out investment strategy can help mitigate risks and ensure a balanced approach to investing in high-growth stocks like NVIDIA. Market volatility, the ever-present threat to stock prices. The stock market is like a roller coaster. It goes up and down. Sometimes it's smooth sailing, and other times it's a wild ride. This volatility is a risk for all investors, including NVIDIA shareholders. Even if NVIDIA continues to perform well, its stock price could fluctuate. Economic downturns, geopolitical events, or even just negative sentiment can impact stock prices. Investors need to be prepared for these ups and downs. They should have a long-term investment horizon and not panic if the stock price drops in the short term. History has shown us that the stock market can be unpredictable. Events like the 2008 financial crisis or the dot-com bubble burst are stark reminders of how quickly things can change. This unpredictability affects everyone, from individual investors to large institutional players. Staying informed and keeping a close eye on market trends can help investors make better decisions. Consulting with financial advisors and diversifying investments are also key strategies to mitigate risks. Diversification helps spread risk across different asset classes, reducing the impact of a downturn in any single investment. Ultimately, a well-thought-out investment strategy and a calm, patient approach can help navigate the turbulent waters of the stock market. Remember, the stock market is a long-term game, and patience often pays off in the end. Competition heats up. Can NVIDIA maintain its lead? NVIDIA isn't the only player in the game. The tech industry is fiercely competitive. Other companies are vying for a piece of the AI and gaming markets. Companies like Intel and AMD are investing heavily in new technologies. They're developing their own chips to compete with NVIDIA. This competition could erode NVIDIA's market share and profitability. NVIDIA needs to stay ahead of the curve. It needs to continue to innovate and develop cutting-edge products to maintain its leadership position. Weighing the pros and cons, a balanced perspective. So, is NVIDIA a buy? It's a tough call. There are compelling reasons to buy and valid reasons to be cautious. On the one hand, NVIDIA is a leader in AI and gaming. It has strong financials and a history of innovation. The company is well positioned for continued growth. On the other hand, NVIDIA's stock is expensive, the market is volatile, and competition is heating up. These risks could impact NVIDIA's future performance. The final verdict: to buy or not to buy? Ultimately, the decision to buy NVIDIA stock is a personal one. It depends on your individual circumstances, risk tolerance, and investment goals. If you believe in the long-term potential of AI and gaming, and you're comfortable with the risks, NVIDIA could be a good investment for you. However, if you're concerned about the high valuation or the competitive landscape, you may want to wait for a better entry point or consider other investment options. Join the conversation. Share your thoughts. What do you think about NVIDIA? Is it a buy, a sell, or a hold? Share your thoughts in the comments below. Don't forget to follow me for more stock market insights and analysis. Let's navigate the markets together.